Never gets old, does it?
I was enjoying myself. Every time
Yeah.
it comes to the last couple seconds, it's like, oh, here we go. Time to launch.
Yeah, we are live. This is Sell Like a CPCU, brought to you by the CPCU Agents and Brokers Interest Group. I'm Matt. This is Precious, as usual. Try not to get into too much trouble today. I've been warned, so I'm going to be on my best behavior, I swear. Before we get rolling, just a reminder, please like, comment, subscribe, share, hit the notification bell, retweet, get this out there to anyone who can use it. We are a show dedicated towards bringing tips, tricks, high-end sales skills to the insurance professionals that are out there, courtesy of the CPCU Agent and Broker Interest Group. So, how are you doing, Precious? You doing good?
I'm good. I've got my new digs, lights, camera, action. So I've got my certificates behind me. I've got a nice ring light going on. I'm hardwired, so I'm on screen. I'm ready to rock.
I was going to say, you got all kinds of street cred behind you. I look like I'm going to a rave.
Yeah, whenever I start to, get into the whole, imposter syndrome, I just, it's a group hug with me and my, diplomas back here.
Yeah. Fair enough. Well, I know you just got a recent one too, right? Was it the SHRM that you got?
Yes, so I'm super excited about that. So it's the SHRM, the Certified Professional. So there's two levels of it. There's the senior level, and then there's the, I don't want to call it the regular one. It takes away from what it is. But no, that was probably next to CPCU, the most challenging, curriculum. The test itself was a 4-hour exam.
Wow.
Yeah, so it was a beast, but I got it done, so I'm super excited. Thanks for bringing it up.
Well, luckily enough, you were probably at home, or did you have to go to a testing center?
Yeah, so quick story about that. So yeah, they had home and remote proctoring. Is all done through Prometric, so same vendor that we use for the society, for CPCU with the institutes. The testing window ran from December 1st to February 15th, and I said, I'll totally do the remote version. When I went to go book the test, some of the test window timing, I was like, so do you want to do 3 a.m? No, I don't want to do 3 a.m. Who's doing 3 a.m? But I guess, hey, if you want undisturbed quiet, if that's just how you roll.
I'll tell you what, as a parent, I might take 3 o'clock in the morning. I'll tell you that much.
It's the last thing about that, because, again, I remember even with CPCU going into the testing center, the whole pat down, scan, empty your pockets. And so they've duplicated that for the remote proctoring. So I had my
stand
webcam.
Up and...
Oh man, I tell you what, we did a 360 of the room. They wanted to see 4 corners of the ceiling. They wanted to see my ears, behind my ears. I had to show them my keyboard, underneath the keyboard, underneath the mouse pad. It was legit. So yes, I did it remote. I was able to do it at 1 o'clock in the afternoon. Thank goodness I didn't have to choose a midnight testing window. But yeah, we're still very much in the thick of, this pandemic. And so having safe options where they exist is, again, it's a lot to go through, but it's totally necessary.
Definitely. Well, congratulations. I love that you're ticking off even more credentials in your professional journey. So that's fantastic.
And I maxed out on character count in LinkedIn. So that was my goal.
That's awesome. You're going to have to start abbreviating the abbreviations. That's awesome.
Right. I stared at the whole, hyphenated name, and I'm like, I probably don't want to touch that. So I have some explaining to do.
Yes. Your husband would be like, what are we not telling me?
I'm married to the profession, man. It was either Walton or SHRM, and I had to make a decision. So.
Exactly.
Creative.
So that being said, we've kept our guest on hold here while we take part in these shenanigans. I will give you the adieu to introduce our esteemed guest for this episode.
Yes, of course. So super excited to have her join us today. So I have Miss Hollie Lippmeier with First Insurance Funding, recently promoted to VP. So congratulations, Hollie, on that promotion. Super excited as she has agreed to come on and share with us, from the agency broker perspective, the benefits, the upside, to offering premium financing.
Yes.
when you give, first of all, when you have a prospect and they have different options available, and then we all understand, especially right now with cash flow, how important it is for people to leverage where they have abilities to do so. So not to steal her thunder, but yes. So Holly, if you can kind of share with our viewing audience, kind of, what you guys do, who you are, we'll get rolling.
Absolutely. No, thank you. First and foremost, thank you, Precious and Matt, for inviting me to your show and opportunity to just speak to everyone that's on here today. And Precious, congrats again. You are truly a rock star. You're gonna have to
Thank
maybe
you.
create a link or a PDF to your LinkedIn so that they can see all your credentials.
Yes.
And then maybe have your own like training platform or something. I don't know.
She's just full of ideas. I'm writing them all
Yeah.
down. I'm all over it. Thank you.
Well, we like to pride ourselves on being more than a premium finance provider. So there you go. For my
Absolutely.
2 cents for what it's worth. But yes, thank you. Everyone, hello. Happy Wednesday. My name is Hollie Lippmeier. I'm the Vice President and Relationship Manager here in the Midwest. And just super excited to be here. I probably am not alone. And I'm not sure if you guys have ever done the CPCU live in person or if it's always been on live, like just through the pandemic. You guys created that. So I apologize. I don't actually know the answer to that question. But I'd love to have been in person and maybe a destination venue on a beach and, enjoying some social activities afterwards.
Yes.
So I miss all of that. A little background about me. Prior to coming on First Insurance Funding, I worked in the insurance industry actually about 15 plus years. So started in college from admin side to personal lines to employee benefits to commercial lines. So I just add that because I have sat in your seats and try to relate to you as much as possible as I work with you on solutions for your insureds in the market today and through the pandemic and how we can get creative and provide more flexibility, I guess.
Awesome.
And then can I just touch on First Insurance, or I know it's not going to be a commercial, but just
go for it.
Highlight the company I work for because it's been just solid to be able to work with a company that has just created a technology platform. So we were day one ready when the pandemic hit and everyone's working from home. So I think it's important to invest into that technology and make sure that we are a true added resource to your insureds on top of adding value and resources. But we're the largest premium finance provider in North America with over 25 years experience, headquartered in Chicagoland, Illinois, with our parent company, Wintrust Bank. So I just wanted to give that a little tagline. I'm actually out of Cincinnati. So Cincinnati, Ohio, I have Ohio, Kentucky, and Indiana that roll under me.
Awesome. Awesome. So to anyone who's unfamiliar with the general world of premium finance, or anyone who's looking at potentially starting their own agency and they don't necessarily know what premium finance is in terms of like a tool and what it fills into the agency portfolio of options for the client. What exactly would you say, kind of like in a nutshell, premium financing provides for typically the insured, because it's really to the benefit of them?
Well, there's benefits to the insured and the agency, but yes, you have to add that value to the insured in order for it to trickle into the agency's lap, of course. But I think first and foremost, the question, what is premium finance? A lot of it's not a new product or a solution. I mean, it's not unique to the insurance market. It's been there for years. There's billions of premium dollars being financed annually, right? So, but it is used to enhance insurance cash flow and lower down payments and longer payment terms to offer better than offered from the carrier. I know that we're in a unique market and carriers are getting a little more aggressive on some of their options that they're providing, but we're still seeing an explosion of the excess and surplus lines market. I mean, we're in a hard market and captives. I mean, captives are a conversational point, and people are growing into the captive space in their agency. So it maybe not be the sexiest topic on the table, and it may actually just be slightly above like janitorial services in the agency. But I will say it is a must-have, and if you're not talking about it with your prospects and insureds, your competition is. Absolutely.
It's okay, Holly. We could doll it up. We'll throw a bow on it. It'll be fantastic. We'll make it work.
Awesome. I knew I liked you guys. I knew it.
Precious, to your position that you've been working in, and Holly brought up a fantastic point. The E&S kind of rise to prominence in the insurance industry has really probably been a boon for you guys, right? I mean, that minimum earned premium on the front end, or the fully earned premium on the front end, is a big deal. And, you know, insureds not having to float that full amount of premium day one is a huge positive. It's a huge positive.
Absolutely. Especially in transportation, I would say that, you know, I think that, you know, before someone kind of gets, you know, moving forward, especially these startups, these new ventures, right? You know,
yes.
they may go to a seminar and someone drops like this giant dollar amount on them, right? Like, to get into the trucking business, you need to have, you know, roughly, you know, 40, 50K, you know, in money saved up, right? And so they go and, you know, they secure a truck and however much they spend for that, and they get all their licensing and they get all that together. And so I think sometimes they take for granted that they don't have to like stroke a single check for 50K, right? Because these expenses are going to come in little by little. And if someone's not disciplined, right, they may kind of just, you know, ease into it, you know, without having like this lump sum of money ready to invest in this brand new business. And so the insurance premium is huge. And I mean that in all sense of the word, because, you know, with new ventures, they call us and maybe they have a ballpark, they've talked to some buddies, and they don't really understand or appreciate how unique underwriting is, right? It's not like I'm going to go to the cell phone provider and say, hey, I want the same unlimited plan that my friend's on, you know, sign me up for the $99 a month plan. And so they're talking and they're realizing, and all of a sudden we drop this, you know, 5-digit figure most often on them, right? That's just going to be, you know, 25 large. And so how do you want to do this, you know? And so now, you know, they're looking at, because again, they still have other expenses that are pressing, you know, because once they have the insurance in place, they still have to go on and do these other things. And so even if they had it lump sum in hand, if you're able to find out some sort of way where they don't have to give that all to you today, then they can take that same money now and apply it towards their electronic logging device or whatever else that they still have, you know, coming up. And so just like with anything else B2B, you know, our insureds in the commercial space, they understand that they're going to have to spend money to make money. But they'd rather spend it after they've made it. Possible, you know. So once they're rolling, once they're profitable, you know, paying an installment monthly, you know, is so much easier to leverage versus forking out this money, you know, from, like I said, day one, hour one, and they haven't picked up the first load yet, you know. So that's the whole conversation about cash flow. You know, ultimately, is it going to make it cheaper? No. Right? This money is still due. Do we have to recoup upfront all of those minimum earned premiums and those non-refundable fees? Yes, because if you buy it today and cancel tomorrow, that cash is still due, right? Yeah. And so it's not like they're going to be able to, you know, this isn't a workaround for what's due. This is just another tool that, if used properly and if understood, you know, can be hugely instrumental, you know, in allowing somebody to move forward, because those upfront fees are, you know, as far as cost to, you know, get going in business, some of them you can leverage and some of them you can't.
Yeah. No, that's a huge point. And Holly, you mentioned something really interesting, and I don't know if maybe like I was reading into it, or you had mentioned something about the carriers providing like installment financing and things like that. Do you have a significant number of instances where the carrier themselves offers an installment plan, but you guys are actually able to come to the table with something more competitive? Because I know sometimes, depending on the risk, right? I mean, there could be some significant fees that the carrier's throwing onto that installment structure, right?
Absolutely. Yeah. I mean, the simple mechanics behind it is we're creating an agreement with your insured to pay the insurance premium in full. So there's usually added discounts to pay that premium in full, right? For the insured. So, and then you guys get your commissions up front, but it's really a conversational point. You need to be consultative. You need to see what are those added fees. Can you get a little, I mean, the finance charges right now, interest rates are so low. So that finance charge, most people aren't even batting an eye. They're really looking for that cash flow, that cash preservation into their organization, and looking for creative ways to do that. How did they add those extra coverages on and maintain their trucks on the road? To your point, Precious, and the transportation. I mean, because that's a huge part of our business. But yeah, it's and maybe having those conversations with the carrier on renewals, especially on those minimum earns. How can we reduce that? What are those ways that we can fine tune that program on the agency side to make it look more attractive for the insured as a solution? And then you as an agent or producer get to own that account a little bit closer, right? So once it goes to the carrier side, and on top of it, who wants to chase money? We're here to help preserve that insured client, your agent client relationship. So we have a whole asset management team behind the scenes saying, we're going to reach out to the insured. We're taking on that financial risk of attaining the premium. You don't have to take an hour, 2 hours out of your day or your team's day to just keep calling on that,
Right.
So.
Right. Yeah.
And especially to your point, Matt, if we're doing this risk analysis and we're coming up with not just like a package policy, but a program, right? And so you understand that we're going to bind the general liability here, but we're going to place your property there. We're going to have the EPLI here, and we're going to have the cyber there. And this carrier is on a 9 pay, and that one's a 12 pay, and this one's a 10 pay, and this one's first in a month. Those are just more gaps in chances that somebody's going to miss an installment, miss a payment, and now all of a sudden, when the cert requests come in, you have to remember, oh wait, this line of business is pending cancel, this one's paid in full. How do you do that? And so by combining them to a single payable, is huge, because now the customer is in the driver's seat and they're not subject to all of the varying, like you said, installment options that may or may not be available, because this carrier might tack on $6 a month because they're getting monthly invoices in the mail. And then these guys require an EFT. These guys can't take a credit card. Billing is such a pain. Following up on payments, I know just from experience, how many times have we reached out and said, hey, you're late on this payment. Like, well, I just paid my insurance. No, you paid that policy.
Yes.
Right.
Yeah.
You have 5 of these payments we're asking for.
And you hit it, Precious. I mean, the consolidation of policies and easy monthly payments or quarterly payments. And I mean, we live in a world of convenience, right? I probably won't make dinner tonight because I have not gone to the grocery store. I don't want to cut up vegetables, and I don't want to, by the time I do all that, I should just go through the drive-through, and it's worth the extra dollars, to try to find a meal, right? So let us package that together in one bag and do ACH, or we could do credit cards. We use all major credit card companies. We can do wire transfers. So we're really flexible with that too. So great point.
Yeah. What would you say is the biggest, I'd say, impediment for, you and First Insurance Funding getting into, I'd say, maybe an agency that doesn't currently offer, not necessarily a competitive situation where, some other financing providers already there, but just an agency that hasn't, made that leap yet? What's typically the biggest hurdle you have to get over in that education or sales process?
It's usually at whoever's doing that quoting process. Look, we've invested into our technology platform. We can integrate essentially seamless, no touch, so that you can produce a PFA to every one of your proposals as it goes out the door. But it's really the team who is going to control that quoting process and that extra work, right? So, and somebody comes in, my boss comes in tomorrow and says, oh, I need you to do X, Y, and Z more this year on top of everything else, and working from home, and maybe your kids are still doing e-learning. Here's one more extra added task that that I'm going to add to your plate. So I think that's the biggest challenge. We really pride ourselves on training. So I think once we get to we do data analytics, so we really want to just give you some benchmark data to make sure that you're competitive in the market and competitive in your states that you're operating in. Once we figure out your program buy rates, your base rates, your fee income into the agency, so that extra revenue drive to the sell rates back to your insureds, who's going to own that process, and then just train them, make it easy. We can do renewal reports, we can plug in the data so it's somewhat integrated. You just renew it, a couple clicks of the buttons. You do have to add it. Obviously, you're updating policy coverages, premiums, taxes, and fees anyway. So you're going to just input that, produce a PFA, and shoot it out the door. But I would say just training, and I think it's having a dedicated team to help handhold you through that process. Because if it's new, it's new. Nobody likes change. I mean, right? I mean, I think we've become a little more. I mean, we've adapted. I'm just applaud everyone on this call and just in the world, because from adult to child, it's been amazing to see how everyone has just shifted gears and accepted and got creative behind the scenes.
So I do want to circle back to the technology piece and how huge that is, right? And so with their technology, and especially with it all being, portal based, we have relationships with, for example, maybe an MGA is already partnered with a specific premium finance company, and the proposals come over and they have all the numbers lined up for you. But then oftentimes you bind it, you send in whatever down payment, and now you don't have access to it. And so the fact that this platform gives you a portal. So as the CSR, whomever in the agency, you have full view of the status of things. Did they sign their premium finance agreement? Have they made their payment? And by the way, they have it to where it goes out to the customer and they can just tap the screen and e-sign, which is major. Because to your point, in this, when everyone's remote and on the go, it's a little bit of a burden to ask someone, I need you to print this wet signature, scan it back, attach it back in order for us to proceed. And so anytime you can just line it up where they can just opt into whatever payment method they prefer, electronically sign it, and then on the agency side, when you're going through your reports and making sure that all the trains are leaving the station, you can see that, okay, they've paid, they're good, kind of the status of things. So I'm a huge fan of portal-driven business models because it saves you an email, a phone call, and then also you can be proactive to the info instead of it being lagging. I think oftentimes, especially independents, we don't know anything is off until we get that notice of cancellation. And they're like, oh, wait, what? They didn't pay? I didn't know they didn't pay.
Or the accounts payable sheet at the end of the month, and you're like, wait a minute, what? How much is outstanding?
Right. How did that get on there? I thought that this was taken care of elsewhere.
Yeah. Absolutely. So no, those are all fantastic points. I think the tech piece of it has also made this service offering a lot easier to incorporate into an agency. And so to your point, Hollie, you're right. Like, new is scary, right? Like, or new is, you worry like, all right, we got a good flow going. We don't want to interrupt the flow, right? But from that standpoint, the tech has made it so much easier, because I can even remember, like, maybe 10 years ago, working at the big broker I was at, we were still dealing in, paper faxed premium finance agreements. Talk about a nightmare, right? Do you guys offer support? Go ahead.
I was just thinking, if this pandemic happened like 20 years ago, I mean, I remember
we'd be hosed.
Polaroid pictures and putting it in a file and using a typewriter to send state forms out. And we are fortunate that I guess, as much as we can say that, never a good time. But to be able to have the technology available to us, we just obviously have to find the funding right, behind it and,
Sure.
and invest into it. So make it
Yeah.
a priority. But sorry, go ahead, Matthew. Go ahead.
No, it's all right. I'm just saying, the tech has made this an even. I mean, like, it was still a good value proposition back then, even when you were chasing the paper. But the tech has just made it so much an even better value proposition now for all of the reasons that both of you stated before. Let me ask you this: so if if an agency does want to get started with you guys, how difficult is the tool up? Like, is it something that you can just basically turn on with a couple of usernames and passwords, or is there a significant time sink or energy sink that has to go into getting up and rolling?
No, just some simple agency forms, obviously, just to do our checks and balances on that end. And then from there, we get your email, name, and we set up security, like which credentials own what process, right? So we don't want maybe a person that shouldn't sign the PFA to just be signing and issuing all the loans through based on your company's objective. But we can get them set up, get their login credentials. We can integrate with most agency management systems, and then from there we can either co-brand, we can create splash signatures, we can really minimize this process so that it's maybe a couple clicks, you get it in the door, and you wait for the insured to respond. And then from there, you can either use our portal or you can use a link to add into your email with additional policy forms that you might have, so that they can go and make that payment, and it's all within one email versus having separate notifications to them.
Okay, and so that I'm a tech nerd and sometimes a tech snob too. But
I feel like you said you could pay if you said you could pay.
But so what does that look like on the back end in terms of being able to link up the agency management system? Because I think most agents are looking for basically the holy grail, like the one system that does everything well, right? But it just doesn't exist, right? Like, there's a bunch of systems out there that do things well, and I think a lot of us have very different tech stacks depending on what our business looks like and the type of businesses that we work with. When you guys basically sync up with that tech stack in terms of the agency management system or whatever else gets done, is that like a member of your team doing the development or the programming work to help supplement that? Does the agency need someone who's like a software developer to work on their side? How does that usually look?
So there's a couple different ways. If we're truly talking just agency management system, so say AMS 360, that is going to be really just a plug and play. So it's going to work as good as your internal workflow processes. So if that's starting at that agency management system level, then you can it helps with that data entry, just brings you to the term stage, and you update or review and produce the BFA. If we're talking a full integration, we're going to need your internal IT help on that, because that's going to be some web calls that are going to facilitate into our internal team, and that just depends on how much time you want to invest and what you guys have set up. We have a great team behind the scenes, and we're always looking to get creative on how to make it work internally for you, right? So that you don't have to go to your team and say, this is an added step in your process today. It's just, hey, you just submit to get a web call. We'll produce the quote, send it back to you based on the information you provided us. You shoot it off your insured. So, I mean, the relationship is between you, the agent, and the insured, right? We don't ever have interaction with the insured until after the process and they become a client. And that's more just for payments and notice of cancellations or cancellation holds. So think of pandemic. I mean, we probably wrote off over, I don't know, maybe close to 2 million in 3 months. Just to late fees, holding cancellations, adding return premium to the actual next payment, so that they can have an extended amount of time before they get back on the road or get their business back to operating statute. So just
And that's a good point, because I know that, like, this time, well, not quite this time last year, but early in the pandemic in 2020, certain carriers, they issued moratoriums for cancellations, right? And so they, gave some grace, and they, suspended payments. And in my experience, a lot of our customers personally, they didn't realize that in effect, that was going to create a balloon payment. And so they had put off 1 or 2 installments. And then on that third month, once these moratoriums expired, they had to pay, they had to catch up the account. So when that happened, you said that, were you guys able to work with people if they weren't able to kind of avoid the whole, kind of stacking up? Because that's also a thing that comes up too, just like with any endorsement or any changes, you're like, how many more installments do we have left to spread it?
Right.
Sometimes if you're making a big change and there's only 2 payments left, you don't have a whole lot of room to, make those payments. So how would somebody, for example, if they had some extenuating circumstance, is it just a phone call to reach out to someone for assistance? What does that look like?
Well, communication is key by any means. I mean, you have to reach out. You have to know what's going on in order to see what we can do. But we are always looking to review the account and see how we can help. Every account is a little different. And like you said, Precious, it depends on where they're at contractually within the loan of what we can do. A lot of, like with COVID, a lot of the insurance carriers were in some of these, like they had to hold for cancellation. Premium finance was really never brought up on what we should do, what we had to do. We just did it as a company of, hey, we want to help our clients. We want to help the world. We want to help everyone. We want to get back to business. We want them to get back to business. So it truly was our CEO, Mark Steenberg, from day one, he said, we're going to do whatever we can, regardless of what is made, what the administration says we have to do. So
interesting.
Awesome. Yeah, that's awesome. So I would implore, I'm sorry, Holly, I'm going to cover over your box for a second here in terms of the comments that are coming in. But Matt Maxwell is asking something. I don't know if this is necessarily something you can speak to, but we can definitely dovetail into talking about at least some aspect of investing. So I don't know if it's the right topic of discussion or not, but I would be curious about premium investment trends, particularly if you can speak toward the shift over towards sustainable investing or socially responsible investing. So as far as that goes, in terms of, I would say more so probably on the back end of your business model, right? Is there a social responsibility component to your business operation? Or the other question would be, in terms of the investment vehicles that y'all might be using on the back end of the financing structure, what does that look like? Is it mostly, I would assume it's mostly safe, secure kind of stuff, but who knows with COVID, because it's pushed people's investment plans all over the place. So
I probably am not the person to speak completely on the back end investment side of things, but
fair enough.
As regards to program itself and on the term, down payment and terms that we're offering for an agency to offer to their insureds, I will say, I mean, we're one of many finance companies, but we all tightened a little bit and made a little more secure investments and decisions towards particular industries and what we were seeing in the market. But again, everyone has a story, and this is not answering. I apologize. It's really not answering your question, but I will reach out internally and get you some more feedback. But I do think everyone has a story. So regardless if we've tightened terms, we don't know the backstory. This insured, where, if we don't have audited financials and we don't know what's going on with what their forward growth is, or who are they part of a captive, but they're keeping their premiums separately, how can we better position ourselves? Tell us a story. That's at the end of the day, we need to know the details so that we can go back to our credit and risk team and say, this isn't just a status quo. it doesn't fit in the box, and this is why, X, Y, and Z.
Awesome. We got another question. I know this is actually Rick's area of interest, as he works in the premium audit world. But so this is a good question for general broker knowledge, but also for you, Holly, as the finance premium finance person. Can premium audits for additional premium be financed?
Premium audits for additional premium.
I've seen some ugly ones, and I've seen some insureds try and angle for this, and usually I get shut down on it.
Yeah, again, there probably need to be a little, if we finance the original loan, there could be potential play there. But again, that's a great question, because it does happen, but it's on a case-by-case basis. I don't think I, as a salesperson, and most people here, as we want to do, we make it happen, right? How can we make it happen? How can we find a solution? Get creative. I would push hard to see what we could do, especially if they were already a client. We would finance a good amount of volume to see what we can do on that for you. Yeah.
And to Precious's earlier point, there might be an open door, right? If you guys are on it and there's some kind of rollover, right? That.
Yeah, no? I was thinking about that, and I was like, because that would be almost the equivalent of being like upside down in a loan, because technically that audit premium is due for that term, and so to take that additional premium and try to spread it into a future term, you're really going to weight that down and just increase the potential for example, if there's a late payment, what was late? You know what I mean? Because now you're like, okay, is this thing pending cancellation for non-pay, or was that audit premium? So I'm going to lean towards it's probably not, as far as, what I've seen. And again, it all determines too on when that audit premium bill shows because if you're well
and how big it is.
If you're well into the next term, sometimes I've seen where it's treated almost like an endorsement, right? And so it just kind of gets added on as spread. But if it's like, net 30 at expiration, then that kind of gets tricky because, you have the not only adjustment on the prior term, but then now you have potentially the new term. And so I guess that kind of circling, that was a long way. That was a scenic route to talk about endorsements. One of the things that I've enjoyed about working with Holly and her team are that when you do have these changes to these additional premium endorsements. It's again, I keep saying it over and over again because it's just so amazing that it's portal driven. You go on there, you add in whatever it is, you spell out however much is due. If there's a down payment required, they're going to generate the link that you're going to send over and collect for it. So it really just kind of streamlines, versus trying to, one of the banes of our existence is trying to catch someone and get them to sign a new finance agreement because now you've added on more premium and the installments are changed, but technology has taken away all the sting of being able to and again that's the conversation when you have your premium financed. As you make changes, you have the ability to finance those changes too, whereas if you're paid in full with most carriers, they're going to want that difference in premium up front.
Well, and then another thing I was just thinking, if this is in relation to, maybe workers' comp, we do have a pay-as-you-go program in place. I know for a lot of kind of the construction or hospitality industries, this is kind of taken off where it's adjusted payments based on the payroll. So there's a whole vetting process, but it mitigates any type of audit, and you wouldn't have to even worry about that. So.
That's an interesting point because I think more often than not, I actually see more of the work comp premium audits. At least, I might be getting a myopic view of the marketplace because of my book. I'm not seeing a ton of like GL audits, but the work comp audits are because. Especially with COVID, right? Like if you have like a lot of hourly labor and stuff like that, if things have been going well, if you're in the minority of businesses right now and things are going well and you have a lot of hourly labor, you're obliterating your work comp number right now. And if you aren't and you're on the other side of it, you basically paid minimum premium based off of a much elevated number that wasn't there at the time. So I think that's a huge offering, because it used to just be purely payroll companies that were offering that, or a few select carriers, right? Now, are you guys, so how does that kind of work on a pay-as-you-go basis? Like, does it have to be a specific carrier for that to work, or is it just you're doing kind of the accounting on the back end and then charging the premium accordingly?
Exactly. Yeah. So we need kind of the feed basically on that weekly or bi-weekly basis to adjust it appropriately throughout the year. But then we're also expanding this program because we have had just a good take ratio and interest on that into the transportation industry. So I might get in a little bit of trouble if there's any internal folks watching this, but we're not there yet, but it's for the transportation industry. So it's pay as you pump, where we'll use mileage for the adjusted payments. So with EDL or EL tracking, and use the transportation's admin for any other analytics. So more to come on that. So I don't know all the details on that, but I know we're working hard to get that up and running, because I think that will be a huge plug into the trucking industry.
Awesome.
Yeah, you said you're not saying these GL audits, and I'm like, on these, and to your point, certain verticals, right? Certain accounts, like, artisan contractor, these GL audits are bananas, because it's true. I think we see GL audits more often with them, than you would, like you said, some of the like public entity stuff, or some of the things that are a little bit more even keel, especially when the audit is sales or receipt driven and not payroll driven. That makes a difference too. I did also want to talk about even how the process is with vetting certain markets, because there are certain carriers, certain markets where it's just understood that outside premium finance is just not compatible. Right. So we have certain carriers, especially like in transportation, where the way certain things get accelerated, the way certain things get applied, and it's just kind of known that you can't finance this particular product with anyone other than kind of who they're connected to at the hip. I'm not going to say names, but there's some of these things that exist that are that way. So I know that with working, again, with First Insurance, that was also part of the process too, right, Holly? Is kind of, giving feedback on, what policies, what lines of business, what carriers are you guys working with, just so that we can make sure, that we're all on board in terms of how that relationship's going to work. So how would you say, for a broker who's trying to get on board, like what information should they have handy to kind of go through that process?
Yeah, I mean, it always helps on just the coverage types and carriers you're working with. Any upfront information that I can kind of move through our internal teams to make sure that there's nothing ongoing behind the scenes that maybe I'm not involved in, because we're constantly looking to make sure that we're having great relationships and partnerships so that it trickles to you, right? You don't want something coming back from a carrier side that went belly up and then you guys have lost premium. I mean, there's just, everyone's losing in that story, right? So we're constantly making sure that people are doing what they're saying they're going to do. Organizations are financially sound. They're being great partners and returning the necessary premium in a timely fashion so that we can close out the books for the insured. But Precious, to your point on the front end, I mean, really we write for most. There's only a few that maybe we have some, trouble stepchildren or whatever, but
imagine that, Matt, some trouble kids. We all know that was like.
I mean, I have two, so yeah, it's a continuous effort on making just finding ways to work with them and how can we better work with them, right? So as long as they're going to recognize us as a finance company and recognize that if a policy cancels, they are to return the premium back to us, so then we can balance or make good on the loan, and then obviously return premium back to the insured if it's on an overage, or back to the agency, depending on if there's other policies that need to be satisfied.
But believe me, doing business in New Jersey, I'm very familiar with written contracts. So I don't want to name names, but there are some accounts where even if you end up writing the account, you don't make any money on it because that money's not supposed to go to you. So, but yeah, no, I think that's fantastic information. I know, is it always just smaller brokers that don't offer premium finance, or are there some larger shops out there that just haven't kind of gone in that direction?
I've seen both ends of the spectrum, where maybe as a larger agent, it just depends who their carriers, what industries they're working at. But I really think everyone should have a premium finance program in place for those one-off instances. You never know what's going to come, but to have something in place when it does makes it a whole lot easier of a process. Plus, who knows if something happens during this pandemic and everything shuts down again, are we going to accept new agents? Or how are we going to be able to facilitate that moving forward? So I always think putting it in place, not always, to your point, there may be some big players out there that you have to use their premium finance company if you want to write with them, or get the discounts to write with them. But at the end of the day, they're small and large. You just need to do your due diligence. If you're working with a premium finance provider today, we'll do some benchmarking to make sure that you are offering your best rates to your insureds and getting all of the technology that you need to offer to your insureds, and then also just build it to your liking, customize it. What do you want? Do you not want fee? Do you want fee to build in some of that revenue stream? Do you want to take off some, maybe there's clients that you put on agency bill. They're still precious. I think we were just talking about that not too long ago, right?
Yeah, my mind was blown that you still have agents out there that are basically facilitating this in-house. Like, they're billing it as agency billed. The agency's fronting the premium on this, and then they just have like a suspense in the file every day. Oh yeah, call Matt and collect, another month worth. And it's like, there's so much unnecessary exposure in doing that, because again,
do I have some stories for you?
I saw the look on your face, and it's just like, this is still happening. People are still doing it that way. Like, I'll just put it on my tab and I'll settle it up. And what's
always fun is when the carrier comes back 3 years later and they go, guys, we've been shorted $1 million in premium over the last 3 years. And you're like, what?
Right.
Yeah,
so we take that risk
crazy.
And exposure off, and then you're building revenue. So you're not writing that off. You can still keep those employees on and even do a party at the end of the year, or do a bonus at the end of the year. The revenue from a premium finance program is not going to keep lights on, but like I said, it's good. It's good party money. It's good beer money for your employees, and
it's good
celebrate
money.
Yeah, a little Miller Lite maybe. Yeah. Like.
Yeah.
I remember with the shutdowns, especially down here in the southern states, and they had the list of essential workers, right? And I was floored to see that like insurance agents were actually on this list of essential workers. I'm like, what is it that we do that demands that we're sitting in an office? I'm so confused. I guess I'm kind of digitally spoiled, right? I'm like, what? Who's doing that? And so I had colleagues that said, yeah, we have people that are walking in payments, right? And so someone's got to be able to, give them a receipt and make change and that sort of thing. And I'm like, again, this may be probably the most, spoiled elitist thing I'll say, but I'm like, debit cards, like access to digital ways to make payment exists, right?
Mm-hmm.
And if you have a book, and if that's a possibility, versus literally having to man a front desk and be exposed because there's no, again, the method of payment. Now, granted, I get it that a lot of that has to do with demographics, geographics, like there's a lot of other factors, but if you can set a program, and again, when you set up the premium finance agreement, you can choose, do you want a coupon book for this customer? Right. Do they want EFT? Do they want email reminders? Because there's so much mail that I get these days. I look at it and I'm like, why are we still killing trees when I've got this set up? So making sure that we're doing things not just for the ease of the agency, but really giving the customer options. Sometimes they didn't know they had choices.
Well, and you have those point-hungry clients. I mean, with those black Amexes, they have a minimum they gotta hit. I mean, if they've got a large insurance premium, that gets them a lot closer than some shopping sprees with the family.
Yeah. But to your point, premium financing is often going to be less expensive than them putting like the paid in full on a credit card, because they're going to be paying massive interest on just a credit card versus leveraging this, which is specifically and exclusively designed for their premiums, so that way they can keep their line of credit open for the other business expenses that come up. They don't have to tie up their utilization on premium now.
Right, exactly. Yeah, that's a great point too, because we're an off-balance sheet item. So premium finance doesn't report to any credit agency. So it truly does keep that future lending power available to them. And then another point is the insureds probably, if they're paying in cash, they could be opening up their line of credit, but they're probably getting a higher interest rate because we're basing it off your total volume. When we're putting together a program, we're saying, what is your potential? You don't even have to give it to us in full, but it's like, what's your potential here? If you offered every PFA, premium finance agreement to every proposal that came out the door, say you get like 50 to 70% take ratio. I mean, maybe you're doing $1 million, $2 million. Your rate's going to be so significantly lower than what most individuals can go to their bank and get for whatever that total premium amount is. So,
right. Yeah,
that's a great point.
And they could do additional coverages. So many stories I heard where insureds were trying to cut trucks. They were trying to cut coverages, the coverage limits. This is a very unique solution of saying, not only do you not have to do that, it's at a minimal cost, and you get to add coverage. We're going to protect you. And this is how. Yeah.
And that's also, that leads me to the other question is, what's the carry cost? Like if an agent was to if a broker was to bring you in, right, and establish a relationship, is there like a fixed carry cost to have you as part of the mix, or is it on an as needed basis?
Oh no, yeah, there's no, we don't have like a contract with any agency. So I mean, there's just some forms where we just need to make sure that you're doing what you say you're doing, you're who you are, and because obviously we're funding lots of money on for your agency and potentially to your agency to pay the market. So we want to make sure that is being handled with care, and you guys are being true to that relationship. But yeah, there's no contractual agreement to use us exclusively. Obviously, you get better rates and terms if you do. And it's probably easier on your staff to just go down to one premium finance source. But we truly want to be on that premium finance solution. We've invested not only to, as I mentioned, the technology platform, but we have our senior VP of sales, Tim Parenti, does training for agencies and their employees. So, in the growth of them, change negotiation, cross-selling, attitude and results. And now that we can do it virtually, we can hit a lot of different topics in different ways. That he's really great at customizing it to whatever's going on with, maybe you're in acquisition mode. We do a ton of agency lending. We can do some prepaid. So maybe you're hiring a number of producers. Maybe we do a 3-year prepaid to get you jump started, pay their salary, and then you pay us back over the 3-year period. So that would probably be the only time that there would be more of a contractual element where you just pay back from the volume that you put in over that year time. But it's something that we would discuss and make sure that we're not setting anybody up for failure.
Sure, most definitely.
Yeah.
All right. Awesome. Well, I want to be respectful of your time. We're going on almost an hour. I want to make sure that you're able to get in how people can find out more about you and how they can get in touch with you. I did share the website is firstinsurancefunding.com. But if they want to reach out to you individually, how can they get in touch with you?
Well, email, phone. So you can text me, email, or call me at any point of the night. I am in sales, so I am on all the time. I gave you my signature. My name is German. You probably saw me. I talked with my hands. I'm part Italian. I'm probably really loud. I'm sorry you had to turn down your volume. But I don't know. Do you have that, Matt, to display? Just because it's.
I am. I'm throwing it into the chat in all of the different verticals that we broadcast out to, and I've also. You have Hollie's LinkedIn profile up here as well, so feel free to seek her out on LinkedIn, and if you're lucky enough, she'll connect with you. Anything we missed, anything that got glossed over or we didn't touch on that's a really big selling point for your team or your product and service offering, as well as that of First Insurance Funding?
I just think at the end of the day, cost of lending is low. Customers need every penny to maintain positive cash flow, right? So if there is anything that I can do, whether it's a 5-minute conversation just to see if we'd be a good fit, to see if you have insureds that this you might want to offer it to. We have a number of flyers, videos. I just want to be a resource at the end of the day. I don't want to be an added burden or anything to add to your team's work. We want to truly help. And when I say that, it's a dedicated team, it's training, it's hand-holding, it's how do we get you up and flying in the air to make this program work for you and your insureds. We want that to be a huge benefit. I mean, we're just seeing a huge surge. So if you don't have one place today, I highly recommend just let's have a quick coffee if you're local and you feel comfortable, or reach out for a quick 5-minute old-fashioned good conference call. And then if you do have one in place, you want to make sure your premium finance provider can grow with you, right? And
Absolutely.
so if you're growing, you need to make sure that they have those advancements as well, and you can partner together. So happy to do just some benchmarking, give you the data to make the right decision for your insureds, and then you do what you want. If you want to use it as just leverage with your current premium finance provider and say, hey, I talked to this girl on CPCU Live, and she said that she said that she could do better, and here's the benchmarking data to prove it. Then do it, leverage it. I mean, at the end of the day, we're in this together, and if I can be a resource, that's what I want to do, because you will come back if you need something and it just keeps everyone honest, right? So if there's off of your program, some of those large renewals that really would go into maybe they're $1 million to $10 million of premium or more, we don't have any type of cap. See what we can do. Give us a chance to earn your trust, your loyalty, and show it. We're okay with that. So, awesome. But I appreciate it. I appreciate this opportunity. It was really fun. And you're right, Precious. The hour went by way quicker than I thought. I was like, oh. My God.
Absolutely. Tons of super helpful. No, the information is great. Yeah, I mean, because at the end of the day, that's our goal, is to provide resources and things so that, if this is an area, in which you lack as an agency owner, and this is a tool that you can incorporate that's also going to help with your strategic growth goals, we want to put all options on the table, and as you were talking, and it reminded me of, back home, there's a commercial that runs for a local dry cleaner, and like their tagline, I don't think anyone on here is from a hometown, but it says, if you already have like a relationship, continue to use their services. But if you are in the market for, a new relationship, we'd be honored by your business. And that's really, what it comes down to for all of us with all the things that we do, that, relationships are huge. I value relationships sometimes even more than like pricing, right? And so, if someone's going to be responsive and engaged and helpful, then sometimes that's going to be, the relationship that you feed versus one that you starve. So yeah, we appreciate you, of course, agreeing to come on and have some fun and hang out with the cool kids for a little while.
Yeah,
The
anytime.
CPCU crowd, of course, they're going to ask you those hard questions, is what we do.
Yeah. And
But no,
speaking
it's
of
fantastic.
questions, will you be sending some of those questions over just so I can make sure that I give a knowledgeable response to all of them and detailed thing. Yeah, thanks.
Definitely. Yeah. Well, I want to say thank you as well. I appreciate everyone who tuned in, whether it was live or if you end up watching the recorded version of this. I would appreciate you throwing the video a like, or if you do have comments for Holly after the fact and you're watching the recorded version, like she stated, go ahead and throw them in the comment section and we'll make sure to get them to Holly so that she can get you some answers. So we appreciate your time. We, as usual, every Wednesday we're here at 3 o'clock 3 o'clock Eastern, 2 o'clock Central, with Sell Like a CPCU. Any parting words, Precious?
No, I think that was it. That was, my heart is full. I'm so excited to have you on. This is really great information. Reach out, connect. That's, if we can deliver something that's meaningful and helpful, that's what we do.
Yep,
Awesome.
That's what we're here for. Thank you, everyone.
Thank you.
Have a very good evening, and we'll see you next week.
All right.
See you
Bye.
guys.